Most people work hard just to watch a large chunk of their money disappear in taxes. You earn, they tax. You get a raise, they tax more. And the harder you push to get ahead, the more it feels like the system pulls you back. But there's something smart earners do quietly. Something that keeps more money in their hands without breaking any laws. It's called looking broke on paper, and you don't need to be wealthy to use the same strategy. This isn't about hiding income or bending rules. It's about learning how the system actually works, and then positioning yourself in a way that reduces your visible income without reducing your real power. The goal isn't to avoid responsibility. It's to stop being penalized for success. Looking broke on paper means structuring your life so that it appears, legally, you're earning less than you really are. And it starts with understanding one simple truth. The tax system is built to favor strategy, not effort. Here's how it works, and how you can start doing the same. First, start with how you earn. If your only income comes from a job, you're being taxed at the highest rate. Your paycheck gets hit before you even see it. But if you earn money through a business, even a small one, you gain control. Suddenly, the system lets you spend first and pay taxes later. It doesn't take much to set this up. A small freelancing gig, content creation, digital services, baking, tutoring, anything. Once you generate income independently, you unlock a new status. You become someone who can deduct legitimate business expenses before the tax bill is calculated. Phone bills, software, your laptop, a portion of your home for work, even your car if you use it to serve clients. All of these become part of your expense column, which means your taxable income shrinks. On paper, it might look like you barely earned anything, but in reality, your life hasn't changed. You've just changed how your money is being counted. That's the power of structure. That's how you begin to look broke on paper, legally. Now, rethink how money moves. Let's say you've built up some assets. Maybe you own a small portfolio of stocks, or you've bought into a plot of land. Most people would sell something when they need money. But selling often triggers capital gains tax. You made money, the system sees it, and taxes follow. But there's another option. Borrowing against your assets. When you borrow against something you own, the money you receive is not considered income. It's a loan, which means you can access large amounts of cash, use it for investments, business moves, or emergencies, and legally avoid any tax for receiving it. That's how people with assets stay liquid without showing income. And it's something you can do once you start accumulating real value. Value that holds weight, even if it doesn't sit in your bank account. Borrowing smartly is not a weakness. It's a strategy. And it's a quiet one. Because from the outside, you're not making large moves. But behind the scenes, you're using leverage to your advantage, without lighting up your tax report. Let's talk depreciation. It's one of the least understood yet most powerful tools available. If you buy equipment for your side hustle, say a camera, computer, or even furniture for a home office, the IRS or your tax authority allows you to spread the cost over time. That's called depreciation. So each year, even while your tools continue to make you money, you also get to show a legal loss in value. That loss reduces your reported profits, and lower profits mean less tax owed. Imagine using a $2,000 laptop for work that lets you earn $10,000 per year. Even as you benefit from the machine, it's showing you a paper loss and helping you keep more of that $10,000. Depreciation is how businesses legally soften their tax burden. And if you're running a small operation, even solo, you're allowed to do the same. When you structure your purchases with depreciation in mind, your financial profile starts looking leaner. And that's the goal. Structure how you pay yourself. Here's where most people miss the opportunity. If everything you earn is taken in cash or through personal accounts, you're paying top dollar in taxes. But if you set up a proper business, something as simple as a sole proprietorship or an LLC, you gain more flexibility. Now, you can decide how much of your business income actually becomes your personal income. Maybe you leave some in the business. Maybe you reinvest. Maybe you take a small salary and let the rest stay in company reserves. By keeping your personal income lower, you reduce your tax bracket without reducing your access to the money. Because the business is still yours, you still control it. But on paper, you look modest. This is how people keep their official incomes low while managing real financial power in the background. It's not about lying, it's about organizing. And once your income looks smaller, you open up access to other benefits. Lower insurance premiums, better eligibility for programs, and less attention from tax authorities. Avoid lifestyle inflation. This is a silent killer of long-term wealth. When people earn more, they tend to spend more. Bigger homes, newer cars, flashier gadgets, and while it may feel good in the moment, It turns you into someone who looks rich and pays like it too. But when you learn to keep your lifestyle stable even as your earnings grow, you gain an invisible advantage. You don't just save more, you also lower your financial footprint. You stay beneath the radar, you build freedom quietly, while others try to display it loudly. Living simply doesn't mean living small. It means not overpaying for appearance. It means choosing peace over proof. Because every unnecessary luxury becomes one more thing the system uses to judge how much you can afford to lose in taxes, fees, and costs. The less you show, the more you keep. And in the long run, keeping more matters more than appearing to have it all. Use legal structures. Setting up an LLC or even registering as a sole proprietor with proper records creates a firewall between your personal life and your business finances. You gain legitimacy, better access to deductions, and more control over your tax situation. In some cases, switching to an S-corp or other structure can even change how you're taxed. You might pay yourself a wage and take the rest as profit, taxed at a lower rate. That's how you show the system: I'm not earning a high salary while quietly growing your real net worth. These are not loopholes. These are the designed rules of the game. And the earlier you learn to use them, the faster you build wealth without noise. Documentation is everything. You can't play this game without a solid paper trail. If you want to reduce your taxes legally, you need to document every expense, every mile, every invoice. Apps make it easy. Scanning receipts, tracking transactions, organizing reports. It's part of the process. And it protects you, because looking broke on paper is only powerful when you can prove everything was done above board. That's how you stay compliant and confident. If your goal is to keep more money, then you have to treat money like a system. Not just cash in, cash out. Every detail counts. Every piece of paper becomes part of the story you tell the government. And the story you want to tell? I run lean. I earn wisely. I spend with purpose. You don't have to be wealthy to benefit from these strategies. You just have to stop acting like a full-time taxpayer and start acting like a strategist. The system is not designed to reward effort alone. It rewards intention, planning, and calm financial movement. When you start structuring your income, using expenses wisely, managing depreciation, and showing less on paper, you begin to unlock what many people never reach: control. Not just over your taxes, over your future. Looking broke on paper is not about shame or hiding. It's about building on solid ground, quietly, legally, and confidently, because the less noise you make, the more freedom you gain. And that freedom isn't just about money. It's about choices. It's about waking up without financial anxiety. It's about having room to breathe, to plan, and to grow, without needing to flash anything or explain yourself to anyone. Every step you take toward looking broke on paper is a step toward financial independence. It's not about deception, it's about design. You're designing a system that works for you, a system that protects your income, supports your future, and rewards the quiet discipline of smart financial moves. So whether you're just starting out or already deep into your financial journey, remember, the goal is not to prove wealth. It's to build it quietly, layer by layer, decision by decision, because in the long run, the people who look broke on paper often end up with the most power, simply because they understood the rules and chose to play smarter.